interest rate increases this year.
The dollar, though, did get a mild boost from the suggestion that interest rate hikes could be on the way sooner rather than later. Let's delve into that and other market movements today. Marshall Gittler is Head of Investment Research at FXPRIMUS. Thank you very much for joining us, Marshall. I want to first start by asking about the terrible attacks in Brussels we're seeing today and the effect that will have on investor sentiment. How do you see investors reacting and what they're worried about?
Yes, well, certainly it is a terrible, terrible event. But when we look at what happened after the Paris bombing, for example, it really doesn't have that much impact on markets or on macroeconomic indicators. Take, for example, the ultimate example of this, the 9/11 event. The stock, if you had invested the day after that, you would have done fairly well. So I don't think this will have any long-term impact on the markets. Or I should say more medium term. It could have a long-term effect if it keeps happening.
Okay, Marshall, I mean, let's go back to the Fed then. I mean, what do you read into these conflicting signals that we seem to be getting from the US Central Bank?
Well, yeah, there are a lot of people on the FOMC, so there are a lot of different opinions. Really, the two guys who spoke overnight aren't voters, and they aren't representative of the opinion in general, so I wouldn't take what they say that seriously. Having said that, Chair Yellen has emphasized several times that every meeting is live and that it is possible for them to move on a meeting even when they don't have a press conference scheduled. So I think April is there. And I agree, I can't remember which gentleman said that things are improving. The economic indicators out of the U.S. are improving. And if they continue to improve and things go well and financial markets calm down, then April maybe and June, very likely, it's time for another hike.
Marshall, the big corporate news overnight, Apple unveiling its new iPhone, or is it actually new at all? Investors not terribly impressed?
Well, yes. I think there are some questions there. First off, is it new, or are they just doubling the price of the previous model of that size? I'm very much interested in this because I'm recommending that my wife buy one of the old ones now that they've cut the price. Also, if you notice, they cut the price of the Apple Watch and introduced a cheaper watch band. That suggests to people that the Apple Watch isn't selling very well. And so where is their new hit product going to come from? There are no signs of a new hit product, so maybe the growth is going to taper off. I think that's what the Apple shareholders are worried about.
Let's talk a little bit about Cuba now. Obviously, a lot of fanfare over President Obama's trip there this week. How excited are investors about Cuban opportunities?
Well, there certainly are a lot of opportunities for investment there. The question is, are there a lot of opportunities for returns? I don't think that people are that trusting of the government. The fact that a lot of people who have existing investments there are Europeans with existing investments are really waiting to sell them to the incoming Americans suggests that maybe they haven't done so well with them so far. So I think people are going to be a little bit cautious about investing, maybe until they see a new generation come into power there.
Marshall, just finally, I want to talk about Brexit. We heard Moody's coming out today with a report saying the impact on the British economy would be minimal, small to use their own words. Just tell us from your perspective, how much are investors outside of Britain really looking at the potential for Brexit as an actual threat? Do they think it'll happen, and what fallout do they expect?
No, I don't think people really expect this to happen, and I think they're misjudging it very much. I think the odds have been narrowing. Okay, right now it's 2-to-1 against the bookmakers are making 2-to-1 against leaving, but a few months ago it was 3-to-1. So the odds are narrowing, and the FT poll of polls shows almost a balanced view. And as we saw with the Scottish referendum, as you get nearer, the side that wants change has more enthusiasm, and they get out, and their support level starts to rise. So I think we could see the same thing as the day approaches. The vote to exit, or the support for exiting increases, and people get increasingly worried. I think there's a big possibility of that. The pundits are really underestimating nowadays just how angry the average person is with the status quo, and how deep the desire for some fundamental change is.
Okay, Marshall Gittler at FXPRIMUS.
Both to Britain and Europe.
There we'll have to leave it. Thank you very much, Marshall Gittler.